Welcome to our weekly livestock market update. I'm news anchor reporter for Brownfield, Meghan Grebner. With us is livestock analyst from the University of Missouri, Scott Brown. Good afternoon, Scott.
Hey, good afternoon, Megan.
Let's get right into it and start a little bit about what happened in the livestock market this week and some things maybe that we should take out of this week's action.
Yeah, so I think when you look at livestock markets, we've been fairly flat for the week. Feeder steers mostly steady, especially for those that are under 950 pounds. So we haven't seen a lot of movement in terms of feeder cattle prices this week. Hog prices, we've lost a little more than a $1.50 off of hog prices for the week, it looks like. But again, not a large change. When we look at choice beef cutout, we lost $3 relative to a week ago. Pretty flat on the pork cutout value, up about 60 cents. So it's been a fairly quiet week when you look at what's been happening in the marketplace.
As we look at that wrap-up, some other things to talk about this week. The WASDE report came out. What do we glean from those numbers and that information?
So number one, I start with when you look at the July WASDE that USDA released this week, by and large, not a lot of changes relative to expectations. So not any large market moves, but I think when you dig a little further into some of the meat S&U information, the thing that sticks out to me, so in the June WASDE, what we had a month ago from USDA, they would have said we're going to be up about 3.1 pounds per person retail weight meat consumption for 2016. From June to July, they moved from 3.1 to 3.8 pounds. So another 0.7 of a pound that you and I get to eat this year. From that standpoint, it's always interesting just what does that mean in terms of a price outlook. The more meat we put on the domestic market, we probably need to lower prices to make sure we move that product.
As we talk about that, let's look at the retail side of things. Is it looking good on the consumer side for them to make their purchases and maybe help us to increase the demand?
Yeah, absolutely. I think when you look at the demand side of the picture, first of all, I'll say I'm very happy to see that demand for meat products by and large has been fairly steady and strong as we've gone through 2016. So even though now I'll switch gears and say, yes, we have some lower retail prices, the demand itself has been relatively strong. When we look at what's available out there on the retail price side, a couple of things stick out to me. So number one, if you look at chicken breast prices that we've seen, we're down about 5% relative to a year ago this time. And at the same time, I'll talk ground beef, down almost 12% relative to what we saw a year ago. And although maybe not always fair, I will sometimes say the less expensive products have been the ones that have been declining the most. If you take the flip side of that, sirloin steak prices, again reported by Bureau of Labor Statistics, down a little less than 2% relative to a year ago, so the decline much less. And we can even go to the pork side. Pork chops down less than 1% relative to a year ago. So certainly consumers are seeing prices for those less expensive meat products falling the most. Perhaps that tells you what demand is like for some of the higher quality, more expensive cuts as we look ahead.
I was just going to ask that. Does that mean we're seeing more people turn to those higher end cuts or more specialty cuts of meat if we're seeing that less of a decline?
It sure seems like folks are more willing to buy up at some of those higher valued products, and maybe a little stronger demand occurring for those higher valued products is what we're beginning to see out of that data. Again, I'll continue to say we need consumers to be in the marketplace, and you know, some of the data we're starting to see there is a little more worrisome.
Let's talk about that. How does that translate into the livestock or the producer side of it when we see a decline in that consumer sentiment index?
Yeah, so number one, you know, early July data suggests we're down about 4% in that consumer sentiment index, and so ultimately I say, you know, I think we talk about this a lot from week to week, Megan, but the growing meat supplies, if we have weaker consumer demand, certainly suggests to me that, you know, it's lower prices for producers ultimately, and so getting strong demand helps us really push against what's additional meat supplies. But we've seen lower, certainly cattle prices. You can't talk to a cattle producer without hearing a lot about how tough it is right now, just given how much cattle prices have declined from where especially we were 12 months ago. I will say when we look at some of that consumer sentiment data, things like Brexit seems to be having some effect, and just the overall uncertainty that we see in the world I think has been troubling to what consumers are seeing. And the more they sit on the sidelines, the longer or the larger the decline in livestock prices that we may ultimately see.
We talk about that demand side of it. Trade is obviously something that we talk about a lot. TPP, we've talked about TTIP, and those trade agreements that help us increase demand and find a place for us to put our products, right?
Correct.
So we look at it being in an election cycle, and there's been a lot of anti-free trade agreement rhetoric from the two front runners on both sides of the aisle for president. We had an announcement this week. You have Donald Trump announcing that Governor Mike Pence from my state in Indiana, who's been a pretty pro-ag kind of guy. How does that play into maybe giving us some confidence that those agreements may have some be able to stay afloat moving forward?
Yeah, so I guess I still see a couple of things. Number one, it's not completely unrealistic to think in lame duck we might get a TPP agreement passed. I think some are still pushing. But maybe that probability is not very high, but possible. At the same time, I think once you start looking at what's been happening with, again, seeing Pence there, I think it's positive for ag. And I will say all the time, when you look at a TPP agreement and we start to really hone in on the facts that we have related to TPP, those are the things we need to be paying attention to. And if I'm talking to cattle producers, my first comment to them is, do you know what Australian beef faces in terms of a tariff going into Japan? And sometimes I don't get an immediate response to that question. But reminding them that there's already an Australian-Japan free trade agreement that's in place that's being implemented that ultimately ends up with a Japan tariff on Australian beef as low as 9%. And you follow that up by saying, and what do we face today for most of our products going into Japan? And you tell them in excess of 40. The idea that TPP is good for U.S. beef movement, it's pretty hard to say otherwise. So getting to the facts instead of some of the rhetoric about TPP certainly shows you for cattle producers in this country, it's something that we need to invest in longer term if we really want that level playing field relative to what other countries have in markets like Japan. And you can go right to pork and say the same thing. The change in the gate price mechanism that we see happening there, I think, is nothing but positive for U.S. pork producers as well. Now, I remind folks all the time, this is not a 2017, let's fix the U.S. pork and beef industries by passing TPP. These are the kinds of investments that take 20, 25 years before we really start to see big impacts. But we have to invest today if we want those payoffs longer term.
Scott, you brought up pork, and as we're talking about supply and demand numbers, some numbers came out from Iowa State this week on those farrow to finish. It almost looks like there's an indication that we have got to find a place to put our product.
Yeah, absolutely. All the time I will say, when you look at what happens as we go forward and who grows, it's consumers outside the United States that are most important to us for cattle and hog producers. So I think we've talked a lot about the expansion in pork processing facilities in this country. And I'll say that's great for producers. But ultimately, what we do with that additional pork that we get out of those plants is just as important. If we're going to push it onto U.S. markets only, I think I know what happens to pork prices and ultimately hog prices. We need to move a lot of that product to a number of other countries, and that's most important as we look ahead. And I will say, you put another dollar in my pocket, and I might not spend very much of it on food today, but I think you put another dollar in the pockets of consumers in other parts of the world, and a larger proportion of that goes for food. We can't forget that those consumers are seeing very quickly growing incomes from lower levels than where we are today in this country, and those are really the folks that are going to be buying a lot more of our product in front of us.
Scott, anything else this week?
I think that's it. You know, I remind us cattle on feed out next week. We'll continue to watch cattle markets and see what we get out of that report. Placements are going to be interesting out of next week's report and could be what moves cattle markets as we move ahead.
Scott, good to see you.
Good to see you, Megan, as well.
Have a great week, and we'll talk to you next Friday.
Thanks.
I'm Meghan Grebner on Brownfield.